Broadcasting. Thank you to everybody that's here and for everybody that will end up watching this on YouTube later. My name is JP. Welcome everybody to the Blockchain and Crypto Mining Association webinar. I am the Southwest Director at BCMA. We are the world's largest nonprofit association for crypto miners. I have with me Scott Offord, also with the BCMA.
Hey guys.
And Scott, if they wanted to get involved with BCMA, sign up, register, get active in the Telegram community, how would they do that?
Yeah. So first of all, our website at BCMA is ourbcma.org, and you can go to their website and check us out. But as far as signing up, I'd say a really great step is to go to our Telegram channel. And on our website, there's a link to the Telegram. And our group is open to sponsorships. You can either join as a member, and you can also sponsor if you want to get a little bit of extra push for your message in front of the mining community. Those opportunities are available as well.
Great. So guys, we have with us a very special guest. We're joined by David Vorick, founder of Saya and also CEO at Obelisk. So Saya, if you've been living under a rock, is one of the leading decentralized cloud storage platforms built in the blockchain. They've created a data storage marketplace that's more affordable than traditional cloud storage platforms. Obelisk is a subsidiary of Nebulous, which is the parent company of Saya. They design and manufacture proof-of-work mining hardware. They currently produce ASIC miners for Siacoin, Decred, and have also announced and begun a pre-sale for Grin miners. So David, welcome. Thank you for being here.
Thanks. It's great to be here.
Great. So I think the plan today is, we'll speak with you a little bit about your ambition for both Saya and Obelisk, and talk about the mining hardware business. Learn a little bit more about building and launching an ASIC manufacturing company. I'm super interested in that. And maybe chat a little bit about the future roadmap for both companies and get some insights from you about the mining ecosystem in 2019 and beyond. How does that sound?
Sounds great.
Cool. All right, so we'll kick things off with the interview segment, and at the end, we'll save some time for questions from the audience. So feel free to ask your questions in the chat by clicking the Q&A button at the bottom of your client, and we'll try to get David to answer those towards the end. So David, first question for you. How did you initially get involved in blockchain and cryptocurrency?
Yeah, so I had a college friend freshman year who just walked up to me. He's like, David, have you heard about Bitcoin? I was like, no. He's like, well, it's not for me, but I think you would really like it. And then he walked away. And so that was basically how I got started. And I got sucked in immediately. The idea of having a currency without a bank was extremely fascinating. And I think this was in 2011. So as the ecosystem evolved, by 2013, I felt very confident that you could use this technology for more than just money, so storage or other applications. And so I've just been basically from that day super locked in and super passionate about cryptocurrency. So I've made it basically my career.
It's awesome. Scott?
Yeah. So you founded Nebulous. That's the parent company behind Saya.
Saya.
And Nebulous, you said in 2014.
Yep. So that was basically as I was graduating from college. We decided that me and my co-founder decided that rather than go into the workforce, we wanted to start a company right away. Especially talking to some people, who are in their mid-20s and early 30s about all the startups they wish they had done. That really convinced us that, at the age of 21 and 22, you don't have much to lose. And so we just took the plunge, took a big risk, turned down cozy jobs at software companies and lived really thin on some investment money, and then built what a Nebulous is today from that.
Yeah, that's the only way to do it. So really, I mean, what made you want to get into the whole decentralized, blockchain powered cloud storage platform thing?
Yeah, I felt like Bitcoin and other cryptocurrencies didn't have any fundamental value, in the sense that, like, if all the speculative attention on Bitcoin disappeared, it would potentially plunge to nothing. I no longer see things quite that way. I do think that Bitcoin has some fundamental value of its own in that it can do things that just can't be done without Bitcoin, even versus other cryptocurrencies. So I don't hold that opinion anymore, but I did want to create something that added value in a different way. And so storage seemed like an obvious situation. So we have our storage coin, Sia coin, that is necessary to participate on the Sia network. And Sia provides a more concrete utility, instead of like a more ephemeral, like it's money that can't be easily stolen, and is sovereign. It's actual storage, and so you can put data on it, and you can do industrial applications directly on this platform. And so Sia is supposed to be faster, cheaper, more secure than any centralized solution like Amazon or Google. And so, give me 1 second. Pardon.
Do 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 do.
Huge apologies for that.
No worries.
But thanks for waiting. Yeah, so we realized that, or wanted to create a system that gave you something concrete, and was strictly superior to a centralized solution. And like, if people have to buy the coin to use the storage, then it has like, that's what was fascinating to me about decentralized storage. And also just the fact that we felt, and still feel today, that you could build a decentralized platform that would be stronger than a centralized alternative.
Okay.
Yeah. So you said that when people have to buy the coin in order to participate in the storage, that was something that appealed to you.
Yeah, because it gives the storage coin a floor value.
Yeah.
I've some questions about that, because I think you brought up a really interesting subject, right? Which is this whole concept of I guess what now today people talk about is like a utility token versus a security token, right? Something that's essentially a financial instrument versus something that you can actually use in exchange for goods or services. Were those concepts back then, thinking back to 2014, 2015, did that even enter into the conversation, or was that just not even a topic?
So amazingly, it was. It's something we thought about carefully, and back then, I don't think the word security token, I don't think that was a vocab term. I don't think utility token was a vocab term either. So we certainly weren't thinking about securities explicitly, but we were looking at things like the stock market. We were looking at things like gold, and trying to reason about, when you digitize things like this, what happens. So we actually created, and this again goes all the way back to 2014, we created a 2-token model. One is the Sia coin, it's the utility token. So that's what you buy storage with. And it's not meant to be speculative. It's ended up being pretty speculative, just because, if Sia is going to be bigger than Amazon, the floor value of Sia coin is going to be quite high. And so people speculated on this. But really, the speculative token was meant to be the Sia fund, where every time that you buy storage on the Sia network or create a storage contract, a portion, 3.9% of the value of that contract, gets allocated to Saya fund holders. And so the Saya fund token is actually your security token. It's a strict revenue stream. And so it's not that it like goes up and down in value with speculation. It actually like produces a dividend. And so yeah, we weren't using the term security token or utility token, but I think the Saya fund like is very clearly a security token, and the Saya coin is very clearly a utility token. So we definitely had the concept itself in mind as we built the original platform.
That's really interesting, David. Switching gears for a second, I'd love to talk about Obelisk. Why did you decide to start Obelisk? Why start a hardware company centered around mining?
Yeah, so at the time, 2017, the mining situation was looking kind of grim. Basically, Bitmain owned everything, and Bitmain was being actively antagonistic towards Bitcoin. And some of the other cryptocurrencies that they made machines for. And I think, especially back then, we used terms like manifest destiny, where it seemed like miners felt that cryptocurrencies were their manifest destiny, and that like the fact that it was decentralized meant that it was free for pillaging. And so this like really coercive relationship existed between miners and cryptocurrency developers. And then also this like super opaque relationship as well. So it really wasn't clear to anyone in the cryptocurrency like developer side of things how mining worked. Nobody knew how farms worked. Nobody knew what the process was to develop a chip or make a mining rig, or nobody knew what the chief concerns were in the mining world. So I think it was this like two-pronged thing where on the one hand we wanted to make a mining company that was collaborative instead of antagonistic, and one that would like support cryptocurrencies instead of pillage them, and then two, we just wanted to understand what goes on in the mining world. What are the incentives, like what are the challenges, and of course we got a lot of that.
We'll get into that later.
Yeah. Well, a couple of lighter questions first. So, do you personally invest in cryptocurrency outside of Saya coin, or?
Largely, I do not. So I do have a stash of Bitcoin that I grow over time. Definitely more of a hodler than a trader or speculator. And then largely, I think that most of the value in this space right now is Bitcoin. And of course, I might make an exception for the Saya fund, which I also think is a very interesting and promising asset. But really, I feel like Bitcoin is if anyone succeeds, Bitcoin will also succeed. And if Bitcoin fails, everyone will also fail. So that's kind of my focal point as far as investment goes.
So other than Bitcoin and Saya, what would you say your favorite coin is, or your favorite project is outside of that?
Yeah, so there are a couple that I'm really interested in. Obviously, Grin is a fascinating project to me, which I would say its chief strengths are actually its like governance model and its origin. It just feels more ephemeral or nebulous. It's like the original protocol author is an anonymous person named Voldemort. The core developer, it's unknown who the lead core developer are. The rest of the developers are kind of ragtag. They're funded on donations, and so it just feels a lot more like cyberpunk, and a lot more like stick it to the man. And I think we need more cryptocurrencies of that flavor. So I like that in Grin. Also a pretty big fan of Monero and Dogecoin. Monero because I feel like they probably have the most practical approach to privacy, even though it's imperfect. I think it's some of the best that you can get. And then Dogecoin, I just like Dogecoin really proved to the world that cryptocurrency is like as much a meme and is as much like a set of ideas and ideals as it is like a functional thing. And I think that was like super valuable. I think it's super valuable for Dogecoin to exist, even though Dogecoin itself is not valuable. The ideas and like the things it showed us have been super important.
Yeah, not valuable yet. We'll see about that, I guess.
I don't know. The market cap hit like 1.3 billion in what, late 2017, early 2018. Like the founder of Dogecoin like came out on record and was like, "What are you guys doing? Like, don't do this. This is a complete meme. Like, there is zero utility. We've abandoned this project a long time ago." But everything was going up. So with a rising tide lifts all boats, I guess. And that goes back to your argument or your point about Bitcoin, how basically a lot of the projects, almost all the projects right now, their fates are probably intrinsically linked to the outcome of Bitcoin, right? In some form or fashion.
Yeah.
So David, you mentioned something earlier, and we wanted to address it and give you an opportunity to kind of talk about it here as a forum. Obviously, Obelisk and Nebulous, have taken some heavy criticism, and there may be, I think, some pending legal action as well, mostly related to, as I understand it, some late shipments, around the batches of miners, the first few batches of miners that Obelisk sold. And also the hard fork that basically bricked the competing ASICs, the Silicon S11 Psi Masters that were using the Blake2B algorithm. How do you respond to some of that, and what are maybe some of the lessons learned, if any?
So I do believe that all of the legal action has been cleared up. I think every court decision has been in Obelisk's favor. And there was a class action lawsuit, which I think was compelled to arbitration. So unless there's an appeal to a higher court, I think that we have put most of the legal turbulence to rest, and in total victory. So we are happy to have that behind us. Obviously, no one ever wants to be under a lawsuit, even if you have full confidence that it's frivolous. But with regards to the hard fork, it was a super difficult decision for the dev team. I think it was a much less difficult decision for the SIA community. And of course, the problem was the obvious incentive misalignment, or the conflict of interest, right? So you had a situation where the dev team clearly had, or at least apparently had, financial gain to be had from executing the fork. I don't think most people realize that we weren't mining on our own machines, and some high percentage of the sales, something like 80% of all machines sold, were sold prior to the fork or discussions of the fork. So the conflict of interest was not as strong as I think most people suspected. Like we didn't go and make tens of millions of dollars off of doing this fork. But it was nonetheless like something that made it difficult for us to act cleanly and decisively. But ultimately, what we decided was that we should do like a community engaged fork. And so I guess what I mean by that is we took extra steps, a huge number of steps, to make sure that anyone who participated in the fork did so willingly, and that anyone who wanted to abstain from the fork had nothing to lose. And so I think that this is something that a lot of people overlook when they criticize the SIA fork. But basically, the most important thing to us was that if you did not believe in the fork, and if you did not want to upgrade to the fork, that it wouldn't happen to you on accident. You wouldn't accidentally find yourself on the fork. So all of the nodes already don't upgrade. So we don't have any way to push an upgrade out to the network, but we do have an upgrade infrastructure. So when we put out a new release, it's some users have scripts that run that will auto update. So one of the things we did was we made sure all the existing release infrastructure pointed to SIA Classic instead of to SIA. So if you had an automatically updating script that script would not fork. You would end up on the classic chain. And so the only people who forked willingly went and downloaded the release or updated their auto script to point to our new endpoints and point to the places where we, the new places that we put the fork software. And then we did 3 more things that I think are super interesting. The first one is that we did replay protection and wipeout protection. And so this just means sometimes in a fork, you get these security risks where you can't spend a transaction on one side without someone replaying it on the other side and then kind of just making a mess. So this was not possible on our code, and there was no risk that if the fork got more work that it would wipe out the previous chain. So the 2 chains were cleanly split, and nobody on either side had anything to worry about. The second thing we did, which is specific to the Sia network and also somewhat of a miracle that we even had a way to do this. But it was such that if you had files on the Sia network, it didn't matter which side of the fork you ended up on. You would be able to still download your files, and your files would repair, and you would be stable. So basically, what would happen is at the fork, you have these contracts with a bunch of hosts. Your hosts would still recognize payments for downloads. And they wouldn't renew the contract with you. So you'd have to find new hosts, and you'd have to repair the data onto those new hosts, but you would have a number of weeks where your old contracts are still valid and still capable of downloading files. And that's enough time for you to migrate all your data over to the new hosts. So nobody's files were at risk because of the fork. And I think that's probably one of the more impressive things that we pulled off. And again, it was super important to us. We didn't want this fork to disrupt users.
Yeah.
The final thing that we did that I think a lot of people overlook, but I think is really important, is that we provided something that we call upstream protection. So a lot of times what happens in a fork is that you get classic software that can't keep up with the master branch. And so as the new version keeps putting out updates and stuff, the classic software falls behind and becomes difficult to maintain because of merge conflicts. And so it takes a rather sophisticated and experienced coder to keep a classic chain merging in all the new features. And we didn't want that. So what we did is we made the entirety of the fork just 4 lines of code. So basically there are 4 switches in our code base that are just, if you didn't fork, it's off, 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 off. And if you did fork, it's on, 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 on. And so any developer who wants to maintain the classic fork will never have a merge conflict just pulling in our new changes today. It's very easy to keep Sia Classic pulling in when we push out seed-based file recovery, when we push out backups, when we push out partial uploads, all that stuff, you can just keep merging into Sia Classic. As it were, no Sia Classic community appeared. No developer took the helm, even though you didn't need an experienced developer. You just needed someone to spend an hour learning how to click the merge button. And there are almost nobody chose to stay on the Classic fork, which is significant to us because, like I said, it's not, you don't automatically update to the fork. You have to opt into the fork. And nearly 100% of our users opted into the fork. And those that opted out went to another system, either Hyperspace or Sia Prime, rather than Sia Classic. So to us, that was a total victory because it demonstrated that we had made the decision that the community wanted to make. And it also meant that, any minority dissenters could still be on the Classic fork. They weren't, no one was forced into forking. And that was really important to us.
Sure. What was the rationale behind, because, I think part of the criticism from the mining community specifically was that you guys had designed the chips in such a way where you had this extra ability, right, into the chips to be able to survive a hard fork. And yet, none of the other manufacturers had that, obviously. I think that was part of the criticism that I heard at the time. How would you respond to that, David?
Yeah, so that's actually not even true. So believe it or not, when Bitmain announced their miner, the following week, I received a phone call from InnoSilicon that basically said, we know you're mad at Bitmain because they made a miner in secret. But lucky for you, we also made a miner in secret. And we put some extra circuits on our miner. So if you want, you can fork and break all of Bitmain's miners so that only InnoSilicon miners are on your network. So this is an actual conversation we had. Obviously, the extra circuit that InnoSilicon had on their Sia machines is different from the extra circuit that Obelisk had on its Sia machines. But I underscore that it's actually something a lot of manufacturers do, and the reason is because it gives the cryptocurrency user base sort of a way out. If you ever get hit by a manufacturer that's being very abusive, you don't have to. You can fall back to another manufacturer. And so it's like a check and balance, and it also means that manufacturers know they can't just behave recklessly. There is a line that they can cross, at which point they will upset portions of the community and the community can exodus, which is what Sia did. So yeah, this extra circuit was not even that unusual. Obelisk was not the first one to put the extra circuit in. I believe that the Dragon Mint was probably the first miner to ship that had an extra circuit in it. And this is just something that manufacturers do so that cryptocurrency users can decide to fork into a monopoly or fork out of a monopoly if they wish. And it's like one thing that you can do if you know that 4 manufacturers exist and all of them have an extra circuit and only one of them is a bad actor. You can fork the cryptocurrency to accept 3 out of the 4. And so you blacklist the one you don't want, but you allow any of the extra circuits of the 3 manufacturers that you like. And so in Sia's case, when we evaluated all the manufacturers, we basically found them all guilty of manufacturing in secret. It was a big request from the Sia community that like manufacturers pre-disclose units. So we didn't end up taking multiple manufacturers with us on the fork. But it's definitely not something that only Obelisk does.
Understood. I do want to get back to that other point later about transparency and why that's been important to you and to Obelisk. But before we get there, I just want to ask you, you brought up Sia Classic, and I think you even mentioned hyperspace. What's your opinion on, it seems like Sia Classic, based on what you've said, is sort of dead as a foundation. There's nobody maintaining it. But what do you think about some of these other projects like hyperspace and others?
Yeah. So for all of the forks, we essentially had one request, which basically stems from the fact that we put a lot of time and mental effort into making these cryptocurrencies. So we want to see if our work goes on to change the world, we want to see compensation for that. It's all open source, so we have no like legal teeth to force you to accept this request. But we do request from everyone that if you fork Sia, you leave the Sia funds in and you give the original Sia funds holders their Sia funds on the new network. So basically, if you make a fork like say Sia Prime, and Sia Prime goes on and it does things differently, it ends up being the dominant storage platform. The original creators, since you're using our code, our architecture, our paradigms, we still get compensated. So that's our request. Sia Prime agreed to this request. Sia Classic, by nature of being the original chain, just de facto agreed to this request. So both of those, we didn't really have any business issues with them succeeding. If Sia Classic went on to be the successful one, we're happy to support that because its success helps our bottom line. Hyperspace went a different route. They decided to take out the Sia funds. They did an airdrop. They airdropped to all of the major contributors of the Sia community, but not the original developers or the company itself. So it was like blatantly antagonistic. So we don't like them. We don't talk about them much. And they have not been very successful. I think all the hyperspace backers have lost a fair amount of money on the project, and that's fine with me.
Yeah.
So yeah.
Yeah, changing the focus a little bit and moving along. So, you know, specifically about mining, what would you say the future of mining looks like? I know it's a big question.
That is a big question, because I think it's hard to predict. I think that it's safe to say Obelisk has already had an outsized impact on the mining community. I think we've done a good job of bringing transparency to cryptocurrency developers. And the more that we learn about the mining industry, the more that we learn that the miners are basically beholden to the cryptocurrency developers. And like, you know, if the cryptocurrency, not even the developers, the user base, if the user base decides to move to another cryptocurrency, and you have all this hardware that you manufactured that's not good for anything but cryptocurrency, and the users are leaving, that's bad for you. That's bad for the manufacturer. And so I think that in the future, I do see, and we're already seeing this, you know, Bitmain, InnoSilicon, WhatsMiner, all three pay more attention to the requests and the status of a cryptocurrency community than they did in 2017 and 2018. And so I do think that that's good. That's going to continue.
What's an example of that?
Developers. Yeah. So I think an interesting example is Zcash, where Zuko made a lot of efforts to reach out to all manufacturers and made certain requests of the mining manufacturers, and they actually had a dialogue with him. And whether or not they went along with his requests, the important thing is that the dialogue did exist, and Zuko managed to speak to some of the prominent people, you know, some of the executives at each of the companies. So I think that was a good example of a step forward. WhatsMiner has actually come and talked to us explicitly, the Sia developers, and asked basically for guidelines. They've expressed the desire to make machines for Sia, and we basically said we have 3 requests, which are announce that your machine exists when you tape out, so that the existing machine owners kind of know you're coming. And then the second thing is disclose manufacturing volumes to keep the network fair and non-parasitic. And then as a third one, I believe we asked that they do not mine the Sia machines themselves. So they sell all of their machines. I have to go plug in my charger, so I will be right back.
Okay.
David, are you back with us?
Can you?
Yep, I think we got you now.
Okay, great.
All right. Yeah. So you were talking about Zcash, and so what about a company like Bitmain, where, you know, a few months ago they specifically said we plan on really trying to connect with the open source community, and then you know, immediately after that they took actions to even lock their firmware down even further. What I mean, I don't know what Obelisk's philosophy on open source is, but yeah, what are your thoughts on that part of things?
Yeah, so our philosophy is definitely open source as much as possible. Our firmware for the batch 1 and batch 2 Cyan Decred miners is completely open source. At some point, we hope to open source the circuit board designs, which we have not done yet. I think it is something we will be doing at some point, but it's both not very highly requested and also a bit of a pain in the ass. But we do intend to open source our circuit board designs at some point. But the firmware is definitely open source. It's easy to tinker with if you know how to write firmware code. And so it is interesting that Bitmain chose to lock down their firmware. I don't fully understand why, unless they think that they have some secret sauce in their code that allows their machine to run more efficiently. Which, I could see that. There's definitely firmware definitely makes a difference in how performant your machine is. But I feel like you would want your users playing around with that, because then the chance of one of your users finding an optimization that you missed as a manufacturer goes up. And of course, if your machine runs faster, that benefits all of your customers, not just the person who found that. So yeah, I can't really say I understand their decision to lock things down so much, but it's something that I would discourage, and something that Obelisk intends to keep all of its firmware open source moving forward, and to the extent the rest of the circuit board and even the chip designs, if we can get away with it. Although the further up the stack you go, the more friction there is to open sourcing.
Yeah.
People like TSMC start to complain.
Yeah. David, help demystify something from us. From soup to nuts, what does the process look like to design and bring a new ASIC miner to market?
Yeah, it's awful. There are a lot of steps, and none of them go the way you want them to. But the very first thing that you need is a high-level architecture. And for something like SHA-256, it's actually super obvious. Wikipedia will give you the optimal high-level architecture for the most part. And while it may be missing some optimizations, the Wikipedia blueprint's pretty good. For something like Grin, the optimal architecture is a lot different. And so, we had to spend probably over a month just thinking about the high level, like what type of memory architecture are we going to have? How's the data going to move around? And so it took us a long time to settle on an architecture for the Grin miner. But then once you have an architecture, you move into gate design. And so that's kind of like, in SHA, some of the things that you have to do, you have to add numbers together. And then, in hardware, there are maybe like 70 or 80 different academic designs for adding two 32-bit numbers together. So it's pretty intense. And so you have to look at all those. You have to figure out what's optimal, and there's trade-offs between like speed and power, and routability. And so that's where a lot of time gets spent. So that's usually called front end. So front end chip design is like figuring out what gates you're going to use, how you're going to add your numbers together, how you're going to do the XORs and all of that stuff. And then once you have your like gate design, you move on to back-end design. And so that's like back-end design is basically deciding how you're going to wire all the gates together. So front-end design just puts the gates down and kind of says, this is what the gates are going to do, but it'll abstract over things like, it'll say like, these wires will all connect, these outputs will all connect to these inputs, and then you just ignore it. On back-end design, it turns out to be super non-trivial. If you have 32 wires crossing over each other and you have a rule book that's 300 pages long that says, certain types of wire configurations are illegal, it's not trivial to figure out the optimal way to wire your gates together. So you often end up spending a lot of time on the back end figuring out how to wire your gates together. And then from there, you do what's called tape out. So when you're happy with the design, the front end, the back end, and you like completed chip, you have to tape it out. So you take an image of the chip and you send it to the foundry, and then you pay them a big bunch of money, and they make something called masks. And masks are basically like plates that etch the circuitry onto the chips. So that's your biggest check is normally making the masks. And masks take maybe a week or two to make. And once you have the masks, you can make your chips. And chips take, depending, anywhere from a month and a half to 3 or 4 months to manufacture. So it's actually a pretty intense process where like you do it one layer at a time, and chips can have anywhere from like 40 to I think over 100 layers. And so you might do one layer a day or one layer every 0.7 days. And so it just goes through this really long pipeline in the foundry. And then, you know, your chips come out and they're done. And then another part of the process that I skipped over is packaging. So you have your raw silicon, but you can't just put like a raw piece of silicon on the board. You have to interface it with it somehow. And so what you do is you put it in a package, usually called like a QFN or a BGA or an LGA. And that's like its own design. It's like a tiny little PCB that goes onto your chip and allows a more full-size PCB to talk to your chip. So I would say those are the major steps. Front-end design can be anywhere from like a week for something simple to, you know, several months if you're doing a lot of non-obvious optimization or you have a lot of architecture problems. So I think the front-end design for our green chip took probably 6 months, but the front-end design for a simple shot chip might be 1 or 2 weeks. And then the back-end design, again, can be anywhere from like 2 months to like 6 months, depending on how complicated and how optimized things are. And then from there, actual tape out to getting chips back is maybe 4 to 6 months. So in total, like a really fast chip design is going to be, oh, go ahead.
No, go ahead.
Yeah,
Finish
so
your
a
thought.
really fast chip design is going to be about 5 months. And a slower chip design is going to be, you know, like a GPU or an AI chip might take up to 2 years to go from conception to completion.
That's really interesting. How much does something like that cost, David? Let's exclude the cost of actually producing the chips once the mask has been created, right? Because that's based on batch size and a bunch of other factors, I'm sure. And could you compare that cost for us for something like Grin versus SHA-256?
Yeah, so 2 really big elements come into your cost. The first one is how complicated things are. So, you know, whether it's SHA-2 or Grin or like a full-fledged GPU, like an NVIDIA GPU. Then the second thing that ends up being a big factor is what node you're at. So if you're making a 65 nanometer versus a 28 nanometer or a 16 or 7 nanometer chip, your costs are all going to be different. And so if you're making a 28 nanometer chip, the total cost is going to be around $4 to $6 million for something like SHA. If you're doing 16 nanometers, it's going to be $6 to $10 million, and that's the range that our Grin miner falls in. And then if you're doing something like a 7 nanometer GPU, you know, that could be well over $100 million to make. So it really, like, the scale is pretty big depending on what you're going to target. It's definitely multiple millions of dollars. And then if it's an ambitious project, it's hundreds of millions of dollars.
I have one more follow-up question on that, which is how much of that, so that's all pure just non-recurring engineering expense, right? How much of that is lost if you end up failing a tape out?
It depends on if you have enough money to do another tape out, and if you have enough time to do another tape out. So, like let's take our Grin chip. I would say about half of the costs, and then about half of our costs are going to be the engineering work. If we fail a tape out and then we get to retape out, you know, we're going to lose the half that we spent on tape out. For something simpler, if your design is a lot simpler, the ratio might be, you know, 10 to 1. And so if you fail a tape out, you might be losing, you know, 90% of the NRE you put up to make the chip. So it depends. And then for something like a GPU, the mask costs are pretty trivial. And so the mask tape outs aren't a very big part of the design. And so failing a tape out, your biggest cost is like now it's going to take 4 more months because you have to tape out again. So yeah, it depends on the scope of your project. Smaller projects are hit a lot harder by failed tape outs than larger projects are.
That makes sense.
Yeah. So a question I had was, what does Obelisk do differently than some of these other manufacturers as far as, I know most of them are made in China, which means they're manufactured and assembled there. Are Obelisk machines assembled in United States or China or a little bit of both?
Yeah, so Obelisk machines are assembled entirely in the United States. So we get some of our components, like our bare boards, from China, but even then, we have alternatives in Taiwan and even Mexico to get our bare boards. And if we're willing to spend a little bit more money, we can also get bare boards from the United States. But the assembly actually happens in the United States. And of course, the chips come from Taiwan. That's where TSMC is. And I would say a lot of people, like, you hear it all the time. And people are like, oh, American manufacturing can't keep up with Chinese manufacturing. The labor costs are too high. And they just keep coming back to this, like, oh, but you can't get over the labor. But I think that the most sophisticated, most advanced, cheapest, like highest scale manufacturing plant in the world is probably in Nevada. It's probably the Panasonic and Tesla Gigafactory. So there's no place in China that can manufacture batteries as cheaply as Tesla can manufacture batteries in Nevada. And the big difference between an expensive factory and a cheap factory is the pipelining and automation, and basically how well they use their machines and how well they use their space. And so, like, when we started looking at manufacturing, it was super obvious to us, like, on day one, you go into an American data center, not a data center, American manufacturing facility, and it's like all spread out, like 40% of the workers are idle at any point in time. Like, people have to walk like 20, 30 feet to get from point A to point B with their parts. And then you walk into a factory in Shenzhen, and it's just like this tight little grid. Nope, everybody sits in the same seat all day, and they just hand the part off to the next guy who's sitting right next to them. And it's just like tight pipeline. All the machines are busy all the time. All the workers are busy all the time. And it's like immediately obvious that it doesn't matter what those workers are being paid. The Shenzhen facility is obviously much more efficient, and it's using its resources much better. And so I really think that, like, you can compete in the US. You just have to find the facilities that have set up their pipelines to be as efficient as what China has done. And I think the US has gotten kind of fat and lazy in that regard. US manufacturing has preferred to blame labor, and has preferred to look at those costs, which is really just that it's not as sophisticated, and their factories just aren't good. But that's something that we've been overcoming. And I think that if you go at it with this attitude of like, yes, we can get to where China is, you really can. And I think that the US could even, supersede China as a manufacturing center.
That's interesting. Yeah, I mean, specifically with all this tariff stuff going on right now, especially with Trump saying that even more items are going to be at 25%. I was just thinking the other day, well, what is that point going to be where manufacturing is going to actually start taking place in North America more than in China? Like, how do we know that Trump or the next president isn't going to lower the tariffs again, or the next one's going to increase it? So because it takes so much planning and so much effort and money and time really to spin up like a semiconductor manufacturing company or whatever, a foundry. What's this going to look like? Is manufacturing actually going to move to the United States or Canada or other countries? if the tariffs go up or down, what's that gonna? What do you think?
Yeah, so that's a good question. The answer is I don't know. We source enough parts from China today that it definitely hurt us when the tariffs went up. We ended up writing like, I don't know, our costs went up by like 5 or 10%, which when our margins are 5 or 10% in the first place, like that really hurts. So the tariffs basically kissed all of our profits goodbye on the signed Decred miners. But it does open these doors for us where it's like all the assembly that we do in the US, all the parts that we do actually make in the US, we pay the tariffs on. So we can sell those, we can sell our completed rigs to North American miners for cheaper than what China's going to be able to sell rigs to. So I think it's a careful balance. You want to make sure that like these, I think that a high enough tariff would definitely suffocate America, and it wouldn't be able to get off the ground because it's still so dependent on China. But on the other hand, like it does open doors. So I think you have to be careful with the tariffs. But yeah, I'm interested to see where it goes. So I don't think I have a strong opinion one way or another on the tariffs.
Yeah.
David, Obelisk has come out with at least one miner that was specifically designed for immersion, and I thought that was really cool and forward thinking. Immersion is something that the community's, I guess, I mean, it's not a new technology, right? But it's something that I see more and more people talking about and are interested in incorporating into their mining farm buildouts and things like that, especially in the last 6 to 12 months. What factors led you guys to bring an immersion miner to market?
Yeah, a couple things. One is that we just got a lot of inquiries for an immersion miner. A lot of people were like, we need an immersion miner. We're sick of taking like entire S9s and just dunking them into an immersion tank. And we're curious what would happen if boards were made for immersion from the start. And so, I think we were just responding to requests from our customers. It ended up being not that difficult. Our first immersion miner has some key advantages, but I think we can push that a lot farther. And I would definitely call our immersion project a success. The number that we've sold has been great. I think that, and we're still waiting like confirmed lab-based results, but field results are suggesting that our immersion miners are about 30% faster while consuming the same amount of electricity, which of course is like a fantastic result. We're amazed that it's that much of an advantage, but the implications are obvious. And then the other thing that you get is like density, and so like in a typical shoebox, we only know how to fit like the biggest shoebox that I think there's a 140 millimeter, the Whatsminer M20S, that goes up to I think 3,400 watts, and that's about all you can pipe through it. But if you go to immersion, I think that you could potentially double or triple the heat density, and that gives you much more economies of scale. If instead of putting, boards are relatively, it's like $40 of fixed cost that you have to pay for a hashing board, and then you pay a per part cost on top of that as you add chips. But if that $40 is being spread over 250 chips instead of 63 chips, then your overall product is faster and cheaper, and also ends up being more efficient for other reasons. So I do think that immersion's interesting because it allows us to push the envelope a lot more. And it's something we're excited about doing because I think it's turning up results in production, that people are seeing these miners, get more bang for their buck.
I would totally agree, and I wish more manufacturers would actually think about introducing miners with immersion in mind. Air is obviously a very inefficient medium for heat exchange. Bitmain kind of experimented with their hydro tank or hydro miner or whatever the heck it was called, and I just didn't really see the point. It was like something that could go on a rack, and it had kind of like this pump system, but it wasn't something that you could actually dunk in an immersion tank. So I don't know, kudos to you guys. I was glad to see that you guys came out with a Siacoin miner designed with immersion in mind. So I thought that was really cool.
Thank you.
Scott, maybe you want to do like one more question, and then I want to ask. We need to ask David about price prediction before we switch it up and get to Q&A.
Yeah, I can ask a question. So recently we've seen a lot of consolidation of retail miners. They've been increasingly pushed out, really, as the price of Bitcoin goes down, or as more mega farms become constructed, and to take advantage of the economies of scale. Do you think that's just temporary trend, or do you think it's a kind of a new paradigm moving towards that? What would you say? Is it all going to be industrial mining in the future, or is there still room for the small guys?
I think it is going to be all industrial. When we look at the cost of supporting retail miners, it's high. We have to have customer support. We have to limit our machines to 1,500 watts. Otherwise, home circuits can't handle it. We have to follow more regulations, and so when we're doing like what's it called, emissions testing and EMI testing, and other types of testing, we have to fit into these more strict boxes to get regulators to sign off on our machine, and so it's all a headache and cost. And when we customers who are placing $5 million of orders at once, we can place bigger orders with our suppliers. We can our production lines are more full, they're saturated, therefore cheaper, and we have more consistent work for our manufacturers. So it's just an unfortunate reality that it's a lot easier for us to get costs down for industrial players than it is for us to get costs down for retail players. So I do think that's something you're going to see stay unless someone finds a way to get retail competitive. And so far, our efforts to get retail competitive have met a wall. It's been hard.
David, I'm going to put you on the spot. Can you give us a price prediction for Bitcoin and then also Siacoin? What do you think they'll be worth in 12, 36, 60 months? So 1, 3, 5 years.
All right. Sure. So I definitely do not advise anyone trade on this prediction. I have low.
Everybody trade on this prediction. David is your financial advisor, and this is financial advice.
This is not financial advice.
I'm teasing. I'm teasing.
But you said 1, 3, 5 years.
1, 3, and 5.
Yeah, 1, 3, and 5. Yeah.
I'd say 1 year Bitcoin is going to be $3,000, and Sia is going to be half a cent. 3 years Bitcoin is going to be $35,000, and Sia is going to be $1.50 cents. And I'll say 5 years Bitcoin is going to be still $30,000, and Sia is going to be 5 or 6 cents.
Okay, so pretty conservative figures.
My not official predictions.
You're not okay. Yeah, you're not all the disclaimers, all the asterisks. This is okay. This is pretty conservative prediction
on those predictions.
Yeah, pretty conservative. Obviously, there's some people in the community that are speculating much higher numbers, but that's where you think it's going to be at. If anybody has any questions for David, please use the Q&A button at the bottom and ask them, because so far nobody's asked anything. So David, I have one more question while we're waiting for anybody to, yeah, go ahead.
I was going to say there is one thing that I actually wanted to touch on, which is that I just think that consumers and industrial players, just buyers of hardware, need to be more aware of, which is that and you see this with manufacturers like Bitmain and InnoSilicon. They often will not, or just strictly always will not reveal their manufacturing quantities. And so manufacturers sit in this position of understanding both how much market is available for a machine and also how many machines they're making. So how much each machine is going to be able to mine. And so if you have a situation where a manufacturer, let's say I'm a big buyer and I think that there are 3 other big buyers, talking to Bitmain, and so I close this giant deal with Bitmain, and Bitmain may know that there aren't 3 big buyers, there are 15, and it closed all 15 deals. All 15 of those buyers are going to be underwater because they were expecting a moderate amount of dilution, and they got massive dilution. And so as a buyer, if you are being told how many machines are being made, you're completely in the dark on whether or not you're going to be underwater, and you're completely trusting the manufacturer not to go and close 10 more deals beyond you. And it's totally in the manufacturer's incentive, because every deal they close, the manufacturer makes more money. So they're totally incentivized to go and close 15 more deals, even if only 2 more make sense. And so I would just urge people not to buy from manufacturers, just strictly refuse to give them money unless they commit to a total production volume. Because that's the only way that you know that you're not being screwed over. And so I think that's very important, and I think that's something that you can fix as a buyer, just by refusing to pay manufacturers who aren't giving you fair information that they have. You can help correct this predatory aspect of the mining business.
It's a great point, David.
Yeah.
We do have a question from Richard. He asks, where can we find more information about setting up an immersion facility, especially related to Obelisk immersion miners?
Yeah, so we have a Discord. I believe if you Google Obelisk Discord, you'll be able to find it. I don't think we have a clean URL for that one. So we're happy to talk to you about the Discord. You can also email hello@obelisk.tech, and we'd be happy to help you. I know that there are some co-location facilities that support immersion mining, but unfortunately, I'm not actually the point person on that at our company. So if you want to know more about immersion specifically, there's someone else at our company you need to talk to. That'd be Ken, who's on Telegram.
Great. Guys, last chance. Does anybody have any questions for David while we have him? We'll give everybody a minute. David, I wanted one question. We had a bunch of questions that we just didn't have time to get to, but how much does the price of crypto influence your business and specifically Obelisk sales?
Massively. They're basically, when the price is better than everyone was expecting, sales are we can sell as many machines as we want, period. So yeah, as we will have more buyers than makes sense to sell to when the prices are higher than people expect. And when the prices are lower than people expect, we will have no buyers at all, period. Even though it may make sense to sell to a small number of buyers, we'll have zero interest. And so that's, I think, that's definitely an arbitrage opportunity. Mining is definitely a situation where the herd currently moves together, and you're going to make more money if you move against the herd. If you buy when prices are down, and you abstain when profitabilities are high, because when profitabilities are high, everybody's buying, so everybody's diluting everyone else. When profitabilities are low, nobody's buying. And so it's like this, at least in the current market, or in the current zeitgeist, it makes sense to go against the flow right now.
That makes a ton of sense. What is your sense of what's going on right now? Are you guys seeing a ton of interest? You're seeing a ton of people buying and investing into mining hardware, or not so much?
Not so much. For the Grin miner, we're definitely in a place where the price predictions for Grin, I think we're anywhere from $5 to $8. Grin is about $2. So yeah, it's been super difficult to sell Grin machines, and we know that all the competition who's selling Grin machines are facing the same wall. Bitcoin has been coming up, and so I think that manufacturers selling Bitcoin rigs have actually been doing reasonably well. And so, you know, at 2,000, even up to the $4,000, it was like also completely dead. Like even though, you know, manufacturers had machines that were much better than ever before, they were having trouble selling reasonable volumes. But now that Bitcoin's up, you know, in the 5,000 to 6,000, those same manufacturers are seeing miners fly off the shelves, and they're selling 6 digits of miners like it's nothing. And so, you know, that's always good.
Yep, absolutely. I think we lost you there at the very end, David. All right, well, we're pretty much out of time. Scott, was there anything that you wanted to ask, or any burning questions, or anything that you wanted to chat about before we
Sure.
let David go?
Yeah, I think just one last question. We can put David on the spot again and just maybe ask him for any specific advice, David, that you have, or any kind of message that you have for the mining community. I know you had something to say to the manufacturers, but what about just advice or any message you have for the mining community?
Yeah, I think the mining community could benefit a lot from more socialization. I think we have seen that. I think the mining community is getting better about talking to each other. But like, I see so many people who like, you know, some mining farms are like really good at substations. Some mining farms are like really good.
I think it cut out there for a bit.
It's extremely see. I think that just people are keeping their advantage to themselves. Can you guys hear me?
Yeah, the connection is a little bit spotty there, but you were talking about yeah, just opening up and really socializing, and then you said something about farms kind of keeping things to themselves.
Yeah, and I think that everyone would benefit, you know, from just talking about their advantages more. You have a lot to learn from each other, and like there's enough Bitcoin block reward out there that like the people being social are going to do better than the people who are, you know, keeping things to themselves. Because by keeping your secrets to yourself, you're going to miss out on all that extra advice that other people would be willing to share with you. And so I think on the net, you have more to lose by abstaining from conversation and by joining it.
Yeah.
Definitely. Lots of wisdom there, and also a good reason to come and join BCMA, get involved, go to our website, ourbcma.org. We put on webinars like this with great guys like David, and we've got a free Telegram community, which everybody should join. The short link is t.me/mining association. So would encourage everybody to get involved, and it's a nonprofit, and that's kind of part of what our mission statement is and what we do. David, it's great to have you with us today. We really appreciate it. I found this super interesting and insightful, and I'm sure everybody else did as well. So thank you so much for being here with us. We really appreciate it.
Thank you. It was great to be here.
Thank you, David.
Thank you. Thanks, guys. So long. Till next time.